So I'm using the same procedure, just reversing. I gave you the sell side I liked. And if you look at the new day opening gap low, and you look at the sell side imbalance, buy side inefficiency right there, including the volume imbalance towards the high of it, shorting it at the upper quadrant, in the upper half, right here on this candlestick, accelerates below here, drop down into the sell side I gave you real time before the fact on X, which is these lows. Right there. See that? Now, because we broke the low, cost covered, plus a protein bar. I guess that would be, it's a large pizza. Commission cost, large pizza. Stomach's talking to me. There's a volume imbalance right there. So that's permissible to trade to, right in there. It would also be revisiting new day opening gap low. Notice it's using the fair value gap that I mentioned as a run higher. That's these two blue lines here. That's what it's keying off of now. It's going to act as inversion. And let's go over here. And that's 15-second time frame. That's what that is right there. Right there. And it's using it right in there. Okay. I'd prefer to see it utilize that as an inversion fair value gap. Which it's showing signs of now. So that would look like this. I can already hear you. You should have did this live. I don't believe you. Good. Okay, so there's the inversion fair value gap. Done with the trend line segments. And it's also encapsulating the 15-second gap that's outlined on X. And now I can bring it down to inside that 15-second fair value gap. Watch this gap here. I'd prefer to see it stay open. And this is micro, high frequency trading, micro market structure, put it that way. I'm trading with a full mini. I made the mistake of pulling up those annotations on this. So I apologize in that regard. So you'll just have to look at this through the lens of, instead of making $665, it'll be $66.50. If it were, Piper's next to me, she's snoring. So you have to bear with me in that regard. And this is how easy it is when you really know what you're doing. You can outline things and you can find setups all day long and literally just walk through a Robin's Cup, put people out of business. You have all that power in your hands. But when you're, when you're nice and in a kindred spirit like old man ICT is. You can spare a lot of people that kind of stuff and just be a gift to the community in the name of Jesus Christ. So it's real important not to feel like you got to rush to chase the stop loss down. You just got to give it some room. Case in point, I'm looking at this wick right there. And I'm kind of like internalizing the midpoint there. I don't want to see it close above that. If it does, then we'll have to revisit this. And then it makes the run continuing below here to that questionable without having deeper retracements. So I know these aren't the clearest of annotations, but doing this in my phone is a little cumbersome sometimes, and I won't be able to get them as timely as if I just scribble on top of the chart. So there's minor sell side below that low. We want to see it get to this and accelerate big black candles, stretched out limousines down here, because this is the 654 club. That's where all the honeys are, all the folks you want to be with, the liquidity. All right, so it tapped into that fair value gap. So we'll draw that there, and we'll do it in red. Volume balance on the low. Keep the bodies in the lower half. That's optimal. See where the stop loss is? It's above that gap. Let me draw that better. It's above this one and this. And the order block's opening range here, which is changed in state of delivery. So I have 3 PD arrays buffering and being a barrier. Not that it can't come out and stop me out. It's fine if it does. In fact, if it does, it'd be wonderful, because then you guys get to see that, sometimes it just escapes me. But it's 3 PD arrays. You have to manage that when you're in your positions. And if 3 PD arrays fail on you on the time frame you're monitoring and trading on, chances are your stop and or positions next. I have to see it accelerate to the downside now. What's wrong, Scout? What's wrong, baby girl? Again, keep those bodies out of the upper half of that fair value gap in pink or red or whatever it is. That's why you don't trail stop loss so tight. Now, it'd be wonderful if it gets up the ghost and just really wilts and just goes down for that sell side right there. That would be wonderful. That would scare anybody from wanting to be long or wanting to buy it, and that's exactly what I like to see when I'm already in a position where they spook everybody out of the position, but my stop still remains. Again, we're looking at a 15-second chart. It only looks fast because your perception is these candlesticks are bigger than what they really are. It's only a couple handles each one of these candlesticks. And because it looks like it moves a lot because of the speed of the rate of change between where it is and where it's gone, it's not a lot of range. Okay, so now we want to see it stay in the lower half on any wicks. It can touch the low, but we want to see it really accelerate and get to that liquidity right there. It's almost like I know what I'm doing. With these powers, I could be a superhero. Could change the whole state of the trading community globally. Can you imagine? All right, so I'm looking at that little gap right there. I want to see it perform as an inversion fair value gap. So that'd be something like this. This video is a little bit longer than I wanted it to be. Okay, retesting the fair value gap low in here. It needs to get real heavy here. Admittedly, I don't like that. I prefer that. See what the body is? It's in the lower half of that gap. So we're reading real order flow without any gimmicks. Your little numbers on your candlesticks aren't going to tell you that information. So now I can lower the stop down just above that fair value gap. So worst case scenario, I get stopped out and I make $260. This low has been pierced. So we want to really see it stay underneath this inefficiency and get heavy and go right to where there's actual orders resting right there, all under there. Small little volume imbalance at reprice too, right there. Again, it needs to get real heavy here. Even if it were to stop me out here, it's still a really good exercise and display of just using the PD arrays on a microstructure. And they can come back for me. Yep, they got me. That's okay. It's still good. That's a good experience for you guys to watch and learn from. And it's not a losing trade. It's always like luck.